Hello, everyone, and welcome to our Future Funding Series event today on tips to set yourself up to succeed with Reg CF. We have Elliot Grossbard and John Vaskis of Arora Project and Republic today, and they have all the expertise you need. So if you have any questions throughout, just drop them in the chat box and we'll get to them eventually. And with that, I'll let Hall, our CEO, take it away.
Thanks, Shane. And I want to thank everybody in the audience for joining us today. And today we have two great presenters here to talk about how to be successful with Reg CF or crowdfunding for your deal. And so we'll kick off here first with maybe introductions. John, can you tell us a little bit about yourself and Republic?
Sure. Hey, everybody. Super excited to chat. John Vaskis here, based up in New York. I head up all new business at Republic. So working with all different startups, helping with the different funding needs. Republic is one of the premier equity crowdfunding platforms where we allow for different levels of investment and different instruments to actually go live. So we have Reg CF, we have Reg A, we have Reg D, all different letters you could imagine. We also have a portfolio company. We also do things on the crypto side. We're actually doing token advisory and tokenomics, helping out with everything there on all the different alternative investments that people could do. I've been here for roughly 6 months, but I am actually very well ingrained in the crowdfunding space. Roughly 10 years ago, I joined a little company called Indiegogo at its infancy, kind of built up everything on their reward side, did that for 7 years. And by the tail end of that, we dipped our toes into equity crowdfunding and started helping that. That was kind of in the beginning when it was a very small thing, and now it's grown to be a mega big market. At Republic, we've already deployed over $1.5 billion and have over 2 million users on the platform. I'm sure we'll dive in a little bit more, but that's a quick little bit about me and about Republic.
Great. Thanks, John. And Elliot, can you tell us a little bit about yourself and your role and what your work you do?
Sure thing. Thanks, Hall. Thanks, John. I am head of sales at Arora Project, and we were acquired by the Republic team and platform about 7-8 months ago, towards the end of last year. I'm head of sales. I work with Republic issuers that are interested in getting extra help in marketing or in content design and creation, and providing any external help that they might need to help them become successful. I've been in sales and consulting for the last 22, 23 years or so. Definitely has been focused on raising funds and marketing of it for the last couple of years. I've been with Arora for the last 1.5 years, and really looking forward to being a part of this great webinar.
Great. So I'll kick off with some of the questions. And if anybody in the audience has a question, please put it in the chat box and we'll work that in as well. The first question to you guys is, what companies do well in crowdfunding? You see a lot of different companies out there come and go, but what do you think is a key characteristic set of those that do well? John, what's your take?
Sure, happy to answer that one, Hall. Companies that have usually have a bit of a community do very well. At Republic, you could kind of join at any different stage. We work with companies from pre-seed really to Series B, but companies that have a bit of a following, whether that's customers, friends, family, product and market, people that kind of come back is always good. Companies that usually do best really have like a recurring revenue stream that's there because they have that customer that comes in there multiple times. It's a little bit different than reward crowdfunding, when rewards is really based around like selling like one individual product or doing one individual thing. Equity, we've seen a lot more success with companies that just have that relationship with their customer and their community long-term, perform a bit better, and ones that really come up with a game plan prior to make sure that it's going to be successful. Those things that we really look for. And usually if they're a little bit further along, so more like seed stage and above, are usually companies that do the best in equity crowdfunding in general.
Great. Elliot, do you have anything you want to add on to that?
I was going to also lead with community, the ones that have the following, the supporters, customers, friends and family, people that can help actually seed the type of campaign and have never had a chance to invest in the company. They do that either they love the brand or they're supporters of the founders. Having a strong foundation with that definitely is a great start for long-term success of them reaching their goals on crowdfunding.
And just to add a little bit more to that, is like the reason why you want that is it adds to validation of the campaign. By being able to come in there and have some momentum based on your community. Upon hitting certain thresholds, people that aren't as familiar with your brand, aren't as familiar with the campaign, will then dive in there, see that there's already some funds, see that there's an amount of investors, watch your video, read more about your story, see some of your financials, and then invest. But if you're not able to get that initial traction, it's just going to be much more difficult to run a successful campaign.
Great. Well, you guys see a lot of people running campaigns. What's the key success factor that you see in many campaigns? And maybe there's more than one thing. John, what do you think is a couple of key characteristics of those running those campaigns? What do they do right?
There's actually a lot of great things that have happened over the course of equity crowdfunding evolving. Not a lot of people say things positive about the government, but when they did redo the Jobs Act that was there, they actually added in something that was what they call testing the waters, which allows them to do which allows companies that are interested in doing it to kind of put out feelers and see if there's interest and to be able to gauge it. It also allows them to do certain interesting marketing capabilities. And a lot of our more successful companies are now utilizing that service to go in, because there's also forms that need to be filled. And there's a timeline between when you're engaging with a platform and you could actually go live. And this gives them things to do to start really priming the pump and make sure that there's some interest there instead of putting all these different efforts. And companies that are doing that, testing the messaging that's on that page, gaining different interest and doing all that prior is a great way to make sure that this is a good solution for you. And we've seen more and more of our bigger raises actually utilizing it and becoming more of a standard way to go to market.
Great. And Elliot, anything you want to add there?
I think a great start is having a great narrative on the actual campaign page, because they're going to be putting in the work, the founders, and getting the people that know them personally, know the founding team, know the brand. But it's the people that already are investing in equity crowdfunding that you want to be able to get interested and learn about your brand. And the best way to do that is to have a great campaign page with a good flow and having a short video. Although there have been plenty of campaigns that have been successful without a campaign video header on their page, having one that's 2 or 3 minutes long definitely has proven to tilt the scales to get someone to stay on the page longer. And the longer they stay on the page, the bit bigger of a chance that there's going to be for them to actually invest in the campaign.
Great. And I get a question a lot from startups about how much time they should be spending on preparing the campaign and running the campaign. John, how do you coach them on that? What should they be expecting to put in to make this successful?
There's different stages in it that they would be doing. In the beginning, it's really getting their financials together and building out some of that page. One of the positives about Republic is that we actually do take the first stab at it. We try to offer a white glove service where once we get a pitch deck from a company that we're going to engage with, we'll actually take like a first stab and kind of build some of it for them so they can see it behind the scenes before they go live. And during that period is when they should really be engaging with their community to start getting that interest, as me and Elliot alluded to before. When the campaign actually does launch, I would treat it really as like a social media network instead of just a funding channel on things that you think would be engaging, sending out updates, writing back into any comments that come in, kind of getting that level of investment, because this is just that type of community. Like they're looking for that. Like they're looking to try to invest in that next big thing. They actually have a tie. And if you're doing like a webinar, if you're sending out updates, if you're writing to those comments, you're going to get the best results out of it. So you need someone that's checking in on it, but it's not something that is like a full-time job. But usually the ones that perform better are probably more mindful of what's going on those pages and checking in daily. That happens once the campaign then ends. Obviously, that's the financial side, but then you kind of just do quarterly updates or monthly updates that kind of let them know, because these are some of your biggest fans, some of your investors that are there. So it doesn't really end, but it is things that reap significant benefits, because outside of just the investment that happens on the platform, they're likely to be like lifelong customers, lifelong advocates, and spread word of mouth. So treat it accordingly there.
Great. And Elliot, what's your coaching to startups that are facing those questions?
Well, I think I agree with what John just said. The only thing I would add, and I know we're going to get into this a little bit later, is the audience that you want to put your campaign in front of. In the beginning, it's going to be community people that are familiar with you. And then it's working, putting your campaign and your deal in front of the people that understand equity crowdfunding, have invested in other ones on the platform and they have a portfolio. Now it's a question, okay, how do I get in front of those type of people? And there are different ways to do it. Obviously, there's pounded the pavement, contacting anybody that you know that might be interested, people that have invested in other campaigns. And then there's the paid marketing end, putting ads on social media and doing the work for that, as well as getting in front of other investor networks. But there's a lot of work that goes into it in the beginning, and Republic is great about helping the founders really set things up, that it's not a full-time job to be able to do it. You can work on your companies. Most of the companies that are raising funds are full functioning companies, so they have to run their business while also doing the equity campaign efforts as well. So, and we're here to help, and John and his team are here to help as well.
Great. And so what content should these guys be putting together for a campaign? John, you talked a little bit about it, but can you get more detailed about what they should be thinking about as a complete deliverable for a full campaign for crowdfunding?
I think Elliot's actually probably the expert in this section, but I could take a quick first stab. That's there is like really, tell your company's story throughout the entire page, and like why, think about it like in a different lens on like what a potential investor would be looking at. And be interested in doing, because that's obviously the audience that you're going for here. You're not looking just for someone to purchase your product, you're looking for someone to potentially invest. So you want to have a video, you want to have different assets below. I think Elliot should probably add a little bit more color into like what a good video looks like, what those assets would be, because that's really a part that Arora is an expert in. But just really doing it through that lens, I think, will really dictate what you should actually be building out on the page.
I think one of the difficulties that issuers have is making the switch of talking to potential customers and looking at potential investors from the private retail markets. It's a different story. It's the same story, I apologize, but it's told in a different way. You have to have that narrative where people are going to be able to understand very quickly why this is an opportunity. And whether that's to get them to stay on the page and then watch the video where you are talking, and it has to emotionally connect with the person who's potentially investing. It's not just the valuation. It's not just because the market, the industry that you're in is just taking off. It has to be more about the story of the actual company and why there is this interest and the potential. And to do that through storytelling is really the best way to go about that.
To follow on to that, Elliot, what kind of digital assets do you need to do, say, the social media marketing side of it? I see a fair amount of work going in that direction, and that's a little bit different than what we did before with just angels and so forth with the pitch deck. Now you have to be on social media. What should they be preparing for that?
Having a good deck is a start, because that's the foundation. But if you have the creative team to be able to, do some of the work on your own, there's also guidelines of what you can and cannot say. I mean, of what you are allowed to include in the type of social media posts and the ads that you're putting out there. You can't talk about the actual terms of the deal. That's what the deal page is for. But it's doing a lot and talking about a little is what I like to say. When we run ads, we don't just put a couple of ads. We'll run 8 to 10 different ads. And it'll be a mix of video and also be a mix of different images. But it's a lot of a little, and doing it different ways. That's how I'd like to really explain it.
Great. I have one more question, and we'll go to the raised hand in the audience. Zachary, if you want to type it in, or we can have you unmute in a moment. We love to hear your question. But my last question here is, John, you mentioned the importance of a network, and it's great to have a community and so forth. My question is how big a network do you need to really run a successful campaign for $500,000, $1 million, or whatever, just to get the scale and size of it? What do you think is out there?
That'll vary pretty significantly based on the size of it. But like usually the way that we would look at it is a good amount to kind of hit that threshold is like take your community and then chop it down like to 5%, like 10% of that. But if you do know that there are individuals that have been interested before, that testing the waters area is a great way to see if they're actually going to make that initial jump to go in, and that could then guide you on what could happen. Because if you do a testing the waters campaign and then you have a couple of big fish that are going to put 100K in, and those individuals and like that, you could feel much more confident about getting there. And that's a good point to start testing it. But it's really that level of engagement of like, hey, I send out this email, and then out of that, I look into my MailChimp, and then I have 50% open rates. You feel very good about it. If that number is not there, it's not as significant. And if it's a paying customer, it's a very different way to kind of look at it. There's like a perfect secret sauce, but Elliot, how do you guys look at that when they're coming in community wise?
I mean, we've recommended even before starting the process is to send out almost like a Google form. We are thinking about raising funds through equity crowdfunding. If we would, is that something that you might be interested in gaining some equity in our company? So, we've had some issuers in the past that have actually done that and then used that as the basis to go ahead and move forward. Obviously, there's no guarantee or commitment, but that's a great way to get a sense and gauge what kind of potential initial reaction there would be.
Well, to follow along with that, I've seen some groups do pre-campaign mailers to go out to just set the context and, identify what you're doing to the marketplace and just warm people up a little bit. What do you see in that direction, aside from the Google form, that people can do to just prepare people for the fact that you may be running a campaign?
Definitely allowing them to know through social media posts, emails, that we are going to be doing this. And since the people are familiar with you and the brand, make it about them. We want you to participate first, to have the opportunity to participate first. And it's something that John can go into more detail about. Is there's opportunities to give them even a better discount off something if they are part of this group, and it could be a certain timeline. But that's something that not every company does, but that definitely gets them interested and knowledgeable of it in advance of actually posting and launching the campaign.
Yeah, when it's before them going live, it's a little bit more flexible with what they could do when they're in testing the waters. It's not actually a live investment opportunity. And that's a great time for different companies to be running different types of ads, seeing what kind of images are connecting the most, what's actually driving traffic, driving engagement in general. Also, it's a great time to be like sending out those emails and getting people ready to be like, hey, we are now 3 weeks out from potentially running a campaign on Republic. Like things like that could get people to be super excited and get that energy level. And then as those different funding amounts are then hit or achieved, whether it's in testing the waters or live, they can start then talking about some milestones that are there. Great things to like think about and like come up with an entire game plan and like, hey, here's an update that's coming out through our page. Ways to kind of continue to engage with that initial traction they're able to gain to then build upon that initial community they come in with.
That's a good point. Thanks for that. So we have a raised hand in the audience. Zachary, if you'd like to unmute and ask your question, please do so. If anybody else in the audience wants to take this opportunity, you'd like to take a break and get questions from the audience. If you have one, either type it in or go ahead and just unmute and ask it to us. That'd be great.
Hi there, sir. Can you hear me? I think I was finally able to unmute.
Yes, we can. Go ahead.
I was curious with the current decline in the economy, how it's affecting the momentum in campaigns that you're seeing across the different platforms.
John, you want to lead with that?
Yeah, sure. Happy to talk about it. Yeah, it is a very interesting macroeconomics going on across the states. I think everyone's kind of seeing that. For us, the Republic platform's always been something that's super far leaning of like, most companies are earlier stage. So rewards that anyone would get for investment will be kind of like in more of like the 4 or 5 years out. We, in general, have seen smaller companies, earlier stage companies, maybe not perform as great as they've done before. Mid-sized companies are still performing as well as they've ever done. And we've actually had our biggest ones still hold that kind of weight, where we're having the most $5 million campaigns still launch. We actually have the record for the most of any platform that's there. Can't speak for the other platforms that are there, but I have seen other emails that they've sent out that they've been having very strong traction as well. I think the way that I would kind of glean to come out of this, again, is to do as much as you can internally to make sure that you're going to launch in a very strong, positive way. Because I think if you come out and it's not super strong, I think investors would look at that probably a couple of times over to be like, looks like a great company and all that, but there's just not that level of validation. So getting as much funding in there early on, I think would be great. That would then propel you to be a stronger campaign. but knock on wood, it's been a little bit of a dip from like the top levels, but it hasn't been anything that's been massive, and most platforms are, from what they're saying externally, in good standing right now.
Great. Elliot, did you have any color you want to add on to that?
I was just letting you guys know that the chat is disabled on Zoom, and that's why we weren't getting any questions. I just got an email from an attendee.
Chat is disabled. Well, we'll work on that, Shane, if you can help us figure that out. And everyone else, we can just do voice for now. But thanks, Elliot. And any follow on to that last question?
No, I don't have anything to add on what John just said.
Okay, great.
I've got a follow-up question, if you don't mind.
Oh, go ahead. Yes.
So I see that, a lot of crowdfunding campaigns are really dependent on advertising to go from your initial group in order to, continue the momentum in your campaign. But it seems like, Facebook or other advertising, there's a lot of barriers to somebody, seeing an ad to going all the way through investing. What have been the most successful, advertising strategies to actually get conversions from, people outside your network?
I'll jump in and take that one, right, John? When we do paid ads for our issuers, we're not doing cold ads. We're putting it into a hyper-targeted market. People that have not opted out of seeing the ads because they have either clicked on other previous ads of campaigns that we've run for other equity crowdfunding campaigns, or an audience that has already invested in other equity crowdfunding campaigns. So they're already qualified investors. The hardest part is to get people to click on paid ads if they don't understand equity crowdfunding. So we specifically look at putting the ads in front of the audience that understand equity crowdfunding, and they are targeted for those campaigns, so they're not necessarily getting blocked, and we're able to get still the traction from that, rather than just doing cold audiences that maybe are not familiar with equity crowdfunding, but are familiar with the brand.
Cool. Zachary, do you have any other questions?
Definitely more of an Elliot question that was there. But I did meet with a little bit with the Arora team, and I think a lot of it is going after those very nuanced audiences, and kind of repeatedly hitting them with different ads and different copy is the best way to try to get around the different changes that iOS and Facebook have put in place. And then part of why we brought Arora in-house is because of their expertise in doing that. And we've seen overall very good results from people that are using their services. So there's ways they try to navigate it. But I think having an agency that has that expertise and has been playing in the equity crowdfunding space before is kind of vital, instead of just any digital marketing agency or maybe just the internal one.
Great. So we have the next question coming up in the chat box. Unless you had anything else, Zachary, we'll go to it. It is Republic like IGGKS in that day one is extremely important for most campaigns? If so, or even if that's not true, is there a rule of thumb for what % of your real goal you want to achieve in terms of TTW reservations before launching?
Exactly, and then I was at Indiegogo for a bit and everything like that. It is a little bit different. In reward crowdfunding, it really is in a U shape. So it starts off extremely strong, and then it'll tailor down, and then it'll end really strong. It's kind of like the natural progression on both Indiegogo and on Kickstarter. Not as much on Republic and on other equity crowdfunding platforms. The big things that you're doing, obviously, testing the waters is a great way to kind of prime it and make sure those all of them get confirmed. And basically, once the campaign goes live, anyone that put in a testing the waters reservation would then get an email, be like, hey, do you confirm? And if you have a very strong network that's there, that number will be very significant, and you're off to a great start. The other thing that happens towards the beginning of a campaign, usually that's when a bigger announcement will happen at the company. Like, hey, here goes an email that gets sent out, and all these other things that come in. But day one is usually one of the bigger days, but it is something where we have seen other blips, where someone gets different marketing opportunities, gets other things that come in. So it's not necessarily like that U shape. There's definitely a lot more different variants that's in there. And some of that also has to deal with days of the week. That's actually one thing that we've seen actually a little bit more here on like around the 15th and the 30th. We've seen kind of an uptick in investment because that's when people typically get paid. That's there's something to kind of like think through, but it's not in that typical reward crowdfunding cycle. We do see a little bit of an uptick towards the end because obviously there's a closing one. With us and all the other platforms, it's regulated on how much promotions we can do. That's there. We're basically able to do like 3 different kind of emails for our issuers, and usually one is at launch, and that's based on when they hit a certain funding threshold. That is there. That will then send out a launch email. Again, that's what we would see perform best because there's that level of validation that I alluded to before. There's one that's kind of in the middle, and then there's one that's close to the end as well. But that's all very regulated on what our platform can do. We're not allowed to, promote any one more than another.
Elliot, do you have anything you want to add on to that?
No, I was going to leave that with John because that was exactly, his wheelhouse.
Okay, great. Our next question comes from Stephen Tarr. Which Reg CF platform do you recommend most often?
Well, I can answer that. John, you're a little bit biased. Definitely Republic. Prior to Republic, we were platform agnostic. And we did some campaigns on Republic, but now being part of the global team of Republic and working with John and his team, it's been amazing. And I haven't seen a more hands-on approach between issuers, founders, and the team at Republic to help them as best as possible than that platform. So, and I've seen just a lot more success overall on the ones that do actually launch on Republic, just from the feeling of it. But happy to be part of the team.
Great. If there are any other questions, go ahead and put them in the chat box. In the meantime, my next question is, how much should you budget for social media campaigns in this process? Elliot, what's your take there?
The average amount that we see founders that are putting towards paid ads are anywhere between 15,000 to up to 35 to 40K. It all depends on how long they're running the campaign, what their budget is. The good thing is that you want to test the ads using a very low ad spend in the beginning to be able to learn which ones are responding the most, and then be able to optimize those ads with increased ad budget.
And the follow-on question is, what ROAS should you expect, return on ad spend?
That's a great question. Things that have changed in the last, I say, year or so, and really we haven't seen a negative effect since the big iOS update of April of 2020. The biggest change has been Facebook's limiting the amount of events that you were able to track over a 7-day period. That really took an effect this year, and being Republic is now it's 8 events per domain, not per page. So they have multiple different, hundreds of different pages. So it's really difficult to get as accurate of a ROAS per page. And that should be something that you would need to pay attention to. So we look at a lot of other metrics, traffic and visitors, as well as the overall ROAS on the page, where it used to be last year 5 to 10x. It's coming in at 1 to 2x now. But we know that number is actually higher, but we can't accurately report it because Facebook doesn't allow us to do it. So as long as those visitors are coming to the page and you're bringing in that traffic, then we know it's working, and issuers usually continue to, let the ads do their work.
Great. And then a follow-on question that comes from Alex is, besides the company's community, the platform community, and online ads, are there any other traction channels, press or third-party email list that provide a significant portion of the raise?
There are other options, but typically those are the 3 big ones that's there. Press and PR usually doesn't provide a significant list from what I've been able to gather so far. Some others try to have like influencers and other people speak about it. It's kind of varied in that approach. But I would really think of it as like those 3 main channels, and others are like nice to have or may do something, but I wouldn't really count on them being a game changer for a raise.
What do you think the role of third-party email lists are for this campaign?
I think it's tough because these are people that really want to know about your your community and about actually the company that's there, and kind of having a third party that maybe isn't as entwined is interesting. But if it is the right audience, there's definitely been overlap. Like if there's different publications that are speaking specifically to like financial, that might be a significant lift, you might say.
Great. Elliot, any
Oh,
color
I'd
you
just
wanna
like
add on?
to add on what John mentioned. I know that founders have spent a lot of money with third parties, getting them into articles in Inc. magazine, Inc.com, and different press like that. That's great to continue to add in your updates of your campaign, but it's not going to really guarantee that people are going to be going to your deal page. So it's something that's good to do. You want to make sure that you're using the right dollars and having the right expectations. I haven't seen those type of placements turn into actual investments, but it's good to add to the press sections of your campaign page and the like.
Great. If there are any other questions, please post them in the chat box. My next question, and this is one I always like to ask, is what's the biggest mistake startups make in crowdfunding? John, what would you put at the top of the list? Or if you want to give us the top three, that'd be great. I think everybody's trying to figure out what to avoid as a mistake.
Yeah, it's tough because working with a lot of different startups, you don't want to see them ever make mistakes, but a lot of them do come in with very lofty expectations based on what they've seen other companies raise, and actually don't think about all the hard work that went into actually making that campaign pop. Whether that is them having a history of performing very well and having, again, that community customer base that they could go into, or coming up with a very firm plan on how they're actually going to engage with a new community or engage with the platform community to get them to become investors in it. That's part of the big push. There's a lot of companies that are like, oh, so this company raised 5 million. Like, I'm just going to raise 5 million tomorrow. Like, I wish that was the case, but there is a lot of work behind the scenes and like coming up with a game plan, and also working very closely with the platform to be like, hey, how do we actually make this whole thing happen? And like, what is the playbook to get the best experience that we're looking for? I think also looking and trying to set like correct expectations is also a thing that they should be doing. Like, how much money do you actually need? What is actually the purpose of using the platform? Is it strictly to just raise funds to get to the next stage of growth? Is it to get deeper engagement with your customers? Is it as a marketing initiative? I think also when you kind of bucket it that way is a great way to really see it. And as I touched on before, like not utilizing it as a social media platform, just using it as just a invest money now kind of area just isn't going to be the best experience, and you're probably going to turn off potential investors. But Elliot and his team have worked on a crazy amount of campaigns. I'm sure he's got a couple other interesting startup mistake stories. So,
well, John, I know that you and I agree that having the right expectations is so important. And some founders come in with a very minimalistic type of attitude that they'll come in and just put up a page and then all the investments are going to be coming in. And it really doesn't work like that. We've seen companies that have had millions of dollars of revenue that have not raised a lot, and companies that are even pre-revenue that have raised a lot more. And it really is the amount of work that either they themselves put in, or they look for outside help that they're putting in to help. But I will say that a strong, solid foundation of the actual campaign page where people are going to learn about your company, and a good less than 3-minute long video. I as an investor myself, I hate going onto a page and seeing a 15-minute video at the top of the page. That's just, no one's going to watch that entire thing. So usually 2 to 3 minutes or less is the sweet spot. But I think having that solid foundation of the deal page is probably the biggest thing that could avoid the mistake of just putting up a page without actually putting a lot of work into the story behind that, the page.
Great. So my next question to you guys is, what's the one thing startups must do to be successful at crowdfunding? If you had to boil it down to one key success factor, we talked about several, but what would you put at the top of the list there?
The same things that I've said before. I would say like doing a lot of research and looking into it, I think is something that is like very important. To really like investigate the different platforms that are out there, really look at what your core audience is going to be, and really game plan around what would make that a success in your eyes. I think that's the biggest thing. I continue to go back into the community and this, that, and the other, but I think actually just putting in some of the time and effort to be like, this is something I want to do. I want to put my brand out there. It is a big potential reward and big potential risk. Like, let's make sure that we have the right assets and the right team behind it to make sure that it's as successful as possible, and that it's going to be a great thing for the brand long term, and it actually hits all the internal funding and marketing metrics that they're looking to achieve.
Great. Elliot, what's your take?
I would reach out to other issuers that have raised on the platforms and try to most of the time, if they're successful, there's someone else that probably helped them. So reaching out directly to those founders that have raised, or even asking the platform, hey, can you put me in touch with an issuer or two? I'd love to talk to them about their past experiences, is certainly helpful in helping them make the decision if this is a good idea to go ahead and launch with a campaign or not. So that's something I would add on to what John just said.
Great. If there are any other questions, go ahead and put them in. We're getting near the end of our time, but my question to John is, what is the unique strength and differentiation of the Republic platform? What is unique about it and what makes it stand out from the others?
Well, that's a good question, Hall. We get that all the time. We pride ourselves very much in being a very curated investment platform. We want to make sure that it's something that both our issuers and investors feel very safe and at home with. So one of the first things that we do is we bring the diligence up to the forefront to really learn as much about the company as possible. So their financials, their pitch deck, all of that. We then bring that to our investment committee that looks it over and is like, this is a great opportunity both for the company, for Republic, and for our investors if it goes all the way through. And then we provide that white glove service the entire way, like building up that page, work with them in deal ops. It is a very regulated, very nuanced, very interesting industry, especially for a lot of first-time equity crowdfunders, community rounders, all these different terms. We want to make that as simple as possible for them and do it in the most compliant way possible. This is something that we want to be very mindful of. On Republic, it is the way that it looks is just one line item in summary on the cap table. We make it as smooth as possible so that this is just a nice thing that they can have when they move forward and they do bigger raises and continue to grow in different ways. And my team, the other teams here, work hand in hand with them to make sure the campaigns go as well as possible. And we've seen those results. Over $1.5 billion have been dispersed. The community is 2 million. We just merged with a company called Cedars, which is a European crowdfunding platform. So we're now opening up global markets to our audience as well that not everyone else could do. I think other people are handling business in other interesting ways, but at Republic, we want to be there for the long term. We want to help out our issuers and investors for the long term. That's kind of the way that we look at the market.
Great. And Elliot, your take?
Well, I think one of the things that Republic does that I really didn't appreciate right away is they limit the number of emails they send out to their community. There is a very nuance that they have of how many emails should be going out of new campaigns that are launching, so it's not overkill. And there are other platforms that you might go to, and every day it's another one that's coming out as a little bit a feeling of saturation. And that comes from, and that really stems from the investment community going through and reviewing deals. And if the investment community comes back and says to the founder, it's just not going to work for us. We don't think this is a good match right now. They're really doing it for the benefit of the actual company, that they don't think that it's ready right now. And we have other ones that have come back later, and then at that time, it's a better time. So they're looking to have as much success of the campaign for the founders themselves. So between those two, having a curated, diligent way of allowing which campaigns to run on their platform, plus selective of which emails and how often they're being sent out to the Republic community, is a benefit both for the community and also the issuers.
That's great. So how best to reach you guys? John, what's the best way for people to reach you?
Email always works. Just john.vaskis@republic.com. Happy to do that. And to reach just my wider team, we're just new business at republic.com, which may be a little bit easier. A lot of people don't get my last name right all the time. Also LinkedIn, feel free, connections, and sending out messages there.
Great. And Elliot, how best to reach you?
Email address, it's just my first name, Elliot, at auroraproject.co. A lot of times I will introduce them right away to JV's team as well. I'm here to help either before or after the introduction to the Republic team. So, it's great that we work very, very well with each other. So it's Elliot, 2 L's, 1 T, at auroraproject.co.
Great. Appreciate you guys coming on today and sharing your information and wisdom with the audience here. I want to thank the guys in the audience, especially those who asked questions. It was great information. We'll be sending out the recording, so you'll get that, and then we'll follow up to see if there's anything we can do to help you guys on your fundraise as well. With that, we'll go ahead and wrap it up. If there are no more questions, I just want to go ahead and thank everybody again for making this a great event, and appreciate everybody's taking time with us. All right. Well, thanks so much, John. Thanks, Elliot. Thank you, guys.
Thanks, Paul.
We'll see you guys next time.